I continue to be very, very bullish, so I'm not surprised to see this recovery be as strong as it is. I continue to believe that there are opportunities in the market to take advantage of weakness, because over the long run and even over the intermediate term, I think markets are going to go higher.
How about overseas? Europe is substantially weaker than where we are sitting right now going into the close. Do you see opportunities in the European markets?
Well, I'm optimistic there. You know, we own a lot of stock in Lazard. And Lazard is not only a great investment banking franchise, but they have a great franchise for international and global investing. We were talking with their management team last week, and they were quite optimistic about what's going on in Europe. And we, in our international team, also believes that there's going to be opportunities there, too.
John, taking a look deeper into emerging markets, what's your expectation on what's going to particularly move there this year? Is that some place where investors who have a lot of gains, perhaps in the U.S., should be looking to move money? And if so, is there a particular area that you're looking at, whether it's Southeast Asia or maybe Brazil?
Well, I think for us, that's really not in our circle of competence. You know, I've spent 35 years here in Chicago focusing on small and mid-sized domestic equities. We have an international and global team in New York that focuses on that. And I know we've been, somewhat conservative when it comes to the emerging markets, but they've gotten a nice recovery, and we think over time that's going to be a great place to be. But we've been sort of cautious in the most recent period. But that's our team in New York that sort of leads that analysis.
John, in terms of, we know some of the minefields in midterm years following a new administration especially have intra-year declines. I think it's average of 16 or so. Today, Blackstone's COO was on our air and said that every historic norm, stocks are very, very fully valued, says that the market could decline between 10 and 20% this year. Do you think that's likely? And if you do, how are you preparing for it now?
Well, we've raised a modest amount of cash just in case there's the inevitable correction that happens, but I wouldn't expect anything near 20%. I think because of the earnings season has been so strong, as Jeremy just talked about, tax reform is a big, big deal for domestic equities, again, where we focus. And I give an example. One of our favorite stocks is Madison Square Garden Network. Not only did they report great earnings last week, but they talked about how much the tax reform is going to help them. And the Guggenheim analysts went from a sort of roughly a low $2 kind of estimate to close to $3 estimate change. So the stock's 8 times earnings. It's extraordinarily cheap, and I think that's going to happen time and time again. We're going to see very, very cheap stocks getting cheaper because of tax reform.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.